Welcome to The Explainer. Today we're going to zero in on one really dramatic signal you might see on a trading chart. It's a single candlestick that tells a huge story, a story about a trend that might be on its last legs. We're talking about the Gravestone Doji.
You know that feeling, right? You're watching a stock just climb and climb, and the whole time you're thinking, okay, is this it? Is this the top? It's the million-dollar question for any trader. How do you actually spot the signs that a huge uptrend is starting to lose its juice?
Well, believe it or not, sometimes the market leaves a clue, a very specific one. It's just a single candlestick pattern, but it tells this whole story of a big fight between the buyers and the sellers. And yeah, it's got a pretty intense name, the Gravestone Doji.
All right, so first things first, what is this pattern really telling us? And, why the super dramatic name?
Okay, to put it simply, think of it as a potential warning flag. When you see one pop up after a really good run-up, it's basically hinting that the upward momentum is getting tired and that the trend might be about to turn around and head south.
And that's where the name comes from. I mean, it literally looks like a little gravestone on the chart. It's a visual metaphor, right? Signaling the possible, the death of that uptrend. And hey, it's memorable for a reason. It's supposed to get your attention.
But before you can really understand the signal, you got to know how to spot the shape in the first place. So let's break down the anatomy of this thing.
So the core idea here is actually pretty simple. The price where the session opened, the lowest point it hit, and the price where it closed, they're all basically the same. This squishes the body of the candle into this super thin line right at the very bottom of the trading range.
When you're scanning a chart, this is what you're looking for. It just looks like an inverted T. That long stick pointing up, that's called the upper shadow, or sometimes the wick. And trust me, that's where the whole story is. So if you put all those pieces together, what do you get? That long upper shadow, that shows the big journey the price took, pushing up to a new high. But that tiny little body way down at the bottom, that shows the journey was a total failure. The price got slammed all the way back down.
Yeah, see, this isn't just some random shape on a screen. It's like a short story, a really condensed one, about a huge fight between buyers and sellers, all happening in just one trading session. So here's how that battle goes down. The session kicks off, and the buyers, the bulls, are just running the show. They're pushing the price way up, higher and higher. That's what creates that long upper shadow. But then, right at the peak, bam, they hit a brick wall. The sellers, the bears, they just come flooding in and shove the price all the way back down. It's a total rejection of that new high.
And that right there, that is the whole point. The buyers gave it their best shot to keep the uptrend going, but they completely failed. By the time the session ended, the sellers had won that round, wiping out every single bit of progress the buyers made. It's just a huge sign of weakness.
Okay, so you see this thing on a chart. Now what? How does a trader actually take this little visual clue and turn it into a real strategy? Let's walk through how you might do that, step by step.
But before we go any further, I gotta say, this is probably the most important rule of all. Do not act on this pattern alone. Seriously, a Gravestone Doji is a warning. It is not a guarantee. You absolutely have to wait for more information from the market.
All right, so a smart approach always starts with context. This pattern means the most when it shows up after a big run-up. Then, step 2, you wait. You have to wait for confirmation. That usually means seeing a bearish candle the next day that closes below the low of the gravestone. That's your proof the sellers are still in charge. Only then do you even think about planning a trade.
Okay, let's zoom out a little and put this pattern into the bigger picture. Because look, just like any tool in a trader's toolbox, how well it works really depends on the situation, and you've got to know its limits.
And this really drives home a huge point. Context is everything. The Gravestone Doji is at its most reliable, its most powerful, when it shows up at the top of a nice, strong, clear uptrend. But if the market is just kind of chopping around sideways, it loses almost all of its meaning. It can just be random noise.
So, the gravestone actually has a cousin, and it means the exact opposite. It's called the Dragonfly Doji. So while our gravestone is an inverted T that hints at a top, the Dragonfly is a regular T and hints at a potential bottom. It tells the story of the sellers trying to push the price down and failing.
Putting them side by side like this makes the difference totally clear, right? They're perfect mirror images of each other. One is about a failed rally at the top, the other is about a failed sell-off at the bottom. But they both tell you that same essential story. Who won the fight during that session?
Now, it's super important to know the limitations here. For one, these things can give you false signals. That's why waiting for confirmation is non-negotiable. Also, the signal gets a lot stronger if it happens on a day with high trading volume. And one more big thing, even if it's a perfect signal, the gravestone doesn't tell you how far the price is going to fall. It's a warning light, not a crystal ball.
A crystal ball? No way, not even close. This isn't about predicting the future with 100% certainty. But what it is an amazing tool for getting you to ask the right question at exactly the right moment.
And that's really the whole takeaway here. When you see a Gravestone Doji after a stock has been flying high, the chart isn't screaming sell at you, it's whispering a question. It's asking, hey, is the momentum starting to fade? Have the buyers finally run out of steam? It's your cue to pay closer attention, look at the whole picture, and think about your risk. It's a signal that tells you to think. And in the world of trading, that might be the most valuable signal you can get.